Hey friends and neighbors, it's Sean Dinner here from the Peterson Real Estate team at Keller Williams. Hope you had a fantastic holiday season and a happy new year. All things considering, I hope you were able to enjoy it to the best of your ability during the lockdown, whichever way that may be. So what this video is going to be about is we're going to take a look at South Mississauga real estate. Obviously, that's where we are right now. And then we'll look at Mississauga in its entirety. And then we'll talk about what the future may hold for real estate here in the GTA. So let's dive right into the numbers for South Mississauga. We're looking at 2019 versus 2020. 2019 being what we would call a normal year in the real estate market. 2020, obviously not so much. So looking at 2020, 140 homes sold in South Mississauga out of 374. 37% of homes sold versus last year in a normal market, 19% of homes sold, 69 out of 359 listings in South Mississauga. So even just looking at the chart here, listings pretty much on par, buyer demand still really high in 2020. So that's why so many more homes sold in December of 2020 and why we continue to see prices increase. Low inventory, higher buyer demand than usual means prices will continue to go up. So is now the right time to sell? Absolutely, absolutely, considering these numbers that we're seeing here in South Mississauga. Now flipping to Mississauga in its entirety, keep in mind the chart sort of flipped here, so we're looking at 2020 in the red, 2019 in the green. So in 2019, December, 41% of listings sold. Now in 2020, 50%. So even Mississauga in its entirety, every property type, half of the listings sold. Now really interesting because you hear all of these articles, prices going up, huge influx of inventory and sales and everything else. However, 50% of homes in Mississauga sold. It's not 100%. And it almost never is. As you can see, quickly go through the numbers here. The highest being 50% this year. And interestingly enough, we're looking at last year, 40%, 41% being the highest amount of total sales. So there's this misguided information out there that if you put your house on the market, it's going to sell. And we could talk all day about that. That's something you can definitely ask me directly, and I'll be happy to have the conversation. However, not every house on the market sells. So just something to throw that out there, and we can talk more in depth at a later time why that is. So that's Mississauga in its entirety. Now if we dive deep into the home types, the main ones being detached, semis, condo towns, and condo apartments. Detached saw a huge increase from 1.3 and some change to over 1.4. So that's $100,000 difference on average in 1 month, November to December. And we're just way above those crazy 2017 numbers. And why I use this is because a lot of people use 2017 as now the benchmark, even though it's the anomaly in the equation. As you can see, 2016 is when things really started to ramp up in Mississauga and the GTA and just kind of skyrocketed here. So really, this number again is crazy. We're on these end of 2016, early 2017 numbers, and this is what we think is happening right now, that we may see a similar situation when the vaccines start rolling out to more of the population, borders open up, there's going to be immigration, all of these things can factor in to just more demand and still low inventory with sellers kind of holding back. Semi-detached, pretty stable, almost flat, we can call it. Condo towns have come up a bit, and condo apartments saw a slight increase as well. So now always the question is from buyers is, when's the best time to buy? Well, funny enough, looking at the charts back here in April and May, but we didn't know that at the time until it already happened. So we do keep a very close eye on inventory. Right now, real quick sidetrack to Toronto. We were telling people prices are dropping like crazy in Toronto because there is a surplus of inventory, and people said, you know what, we're going to wait, let's see what happens. They wanted prices to drop, they dropped, And then people got scared that they were dropping, so they didn't want to buy because they thought they would keep dropping. Well, guess what? Now the inventory has all been snatched up by those savvy home buyers, whether for themselves or as an investment. And now the inventory is dried up. And we have people saying, hey, you were telling me Toronto has all this inventory. There's great deals. So where are they? Last fall. That was happening last fall, early winter. And if you missed the boat, sorry to tell you that. Yes, there may be some deals out there at the moment, but inventory is back to being pretty tight, even in the Toronto condo market. So that being said, found this really interesting article in the Financial Post. I'll leave the links below as well. No one can foresee the future, right? If we could, we'd all be billionaires by now. So this is just an interesting look and what we think is going to happen. We've heard anywhere, this article says 3 to 10% drop. Some people are saying 18%, which is just nuts. And unfortunately, these are the articles that catch people's attention and what the information that people hold onto, and they think they're going to find a place 18% less than it is today, but all of the numbers don't show that. So it's sometimes frustrating knowing that some home buyers out there could have a house right now, start building equity, but they're holding off, and it ends up costing them more money in the long run, or maybe even pushes them away from home ownership completely because 6 months, a year from now, they can't afford the house that they were looking at. So anyways, some people expect to take a hit, with all of these deferrals, and people expect the rates to go up, which is going to drop prices. However, this one economist says, in order for the housing supply to quash the price growth, new listings would have to jump $50,000 a month, or rather, a 70% increase of 70% for a sustained period. This is all across Canada, keep in mind. And looking at the mortgage deferrals that I know even some people to me are banking on people going into foreclosure and power of sale. In the spring, 622,000 Canadians deferred their mortgage. October, 70,000. Again, across all of Canada. So if only 10% of those homeowners who deferred their payment were actually forced to sell, and that was spread over 6 months, it would only boost new listings about $10,000 a month, again, across Canada. So we're still very, very far away from that point of 50,000 homes we would need on the market for prices to start decrease naturally. And if rates do decide to go up, Bank of Canada is already talking. They don't expect to start raising rates until 2023. And when they do, it's going to be a slow process. They're not going to go from 0.99 in some banks to 3%, 5%, which is going to cause prices to plummet. It's not going to happen. They're smart. They're not going to ruin the economy just to bring home prices down. So anyways, that is what we think is going to happen. This economist here is predicting that there's going to be a 10% increase in prices in first quarter of 2021, with it slowing down to 5% by the end of the year and 2% by the end of 2022. This is more in line of what we are feeling and anticipate, considering we watch the numbers so closely and use that to compare to years previous to get an idea of where we're going to be in the near future. So hope this helps. I know it's a lot of things I'm throwing at you, so any questions, please do let me know. I'll be happy to have a conversation and find out where you are at in your situation and the strategy we can come up to best help you to get you to where you want to go, whether it's staying put or moving into a bigger or smaller place, depending on your needs. Anyways, thanks again for watching. My name is Sean with the Peterson team at Keller Williams, and leave a comment, send me a message, and stay tuned for more videos coming to you soon.